Alright guys, today we're going to be covering section 15-3, preparing a statement of stockholders' equity. So what is the statement of stockholders' equity? It's a financial statement that shows changes in a corporation's ownership for a fiscal period, which is the technical definition. Technically, you guys, we actually covered this last semester, but we didn't turn it into an actual financial statement. It was when we were doing our balance sheet, and we talked about making the owner's equity section in detail versus summed up in a single number. So for corporations, we have an extra statement, which is for the detail of basically the owner's equity section of a balance sheet. So there's two main parts of it. There's the capital stock and the retained earnings. So the capital stock section is basically going to tell us what the value of all the shares of stock that have been issued is. And if you know anything or much about stock, you know that the prices fluctuate. So the real question is, what value do you use? And we use something that's called the par value. And that is the value that we assign to the shares of stock at the time that the company initially issued them. And they are the values that are printed on the original stock certificates. So the other section is going to be the retained earnings section. And just like last semester, that's going to be our accumulation of our net income of loss over time. So let's see what these look like. So the first part of it, make sure we always put our title of our company, and then we have what the name of the statement is, and then the date for it. So for a statement of stockholders' equity, it's always for a year ended because it is showing stuff over time, kind of. So we start with the capital stock section. So the first thing you'll do is title the section. Then the next line will always tell you what the par value is of the stock. And then we're going to say how many shares did we have issued as of the beginning of the year. So see January 1st. We had 2,000 shares. But you'll notice over here the balance is not 2,000. It's 100,000. And we get that by multiplying the number of shares times the par value. So $50 times 2,000 equals 100,000. Then it's possible that as a company we decided we needed to raise more money, so we issued additional shares or we sold additional shares at that same par value. And so it says issued during the current year, we issued 500 shares. Once again, 500 times the $50 par value gives us the $25,000. And then we total those two up to get our ending balance of capital stock that we have issued as of December 31st. And it now lists the total number of shares, which is 2,500. That will become our beginning balance for the capital stock section of our next period's income statement of stockholders' equity. So if you were to try it, if your par value of the stock was $20 per share, and at the beginning of the year you had 5,000 shares outstanding and you issued an additional 1,000 during the year, what would be your ending value of capital stock? I'll give you a second to try and calculate that out before I show you the answer. Okay, so what you should have gotten as your answer was that you would have 6,000 shares, which would equal 120,000. So how did I get that? I started with the $20 par value. I had started with 5,000 shares, so 5,000 times 20 equals 100,000. And then we issued an additional 1,000 at $20 a share makes 20,000. You add those together, you get 120,000. So the second part of it is the retained earnings section. So once again, you're going to have the retained earnings, title it. You're going to start with your beginning balance, and this is, like I was saying, this was kind of what we did last semester. So we started with $10,761.29. And remember, this is the accumulation of all of our net income and losses. So now we need to either add or subtract our net income or loss. So in this case, we had a net income. And we always do it for the one that was after federal income tax. So if you guys remember on the worksheet, we don't actually ever see the net income before taxes. So it should be pretty easy to remember. You're going to use the one that's after taxes. And then from that, we actually have to subtract our dividends. And that is the portion of the earnings that we have paid out to the owners. So that is not retained. So it can't be in retained earnings. So we have to subtract it. So you will find that number on your worksheet, and I'll show you when we do the work together where that is. So you subtract your dividends, and that gets you your net increase. So we increased by $80,313.95 or 95 cents for our net income, but we had to reduce that by the $20,000 we paid out to our owners. So our net increase was the $60,000 number here. So then we have to figure out what is our balance at the end of the year. So we take what we started with plus or minus whatever we increased or decreased, and then that gets us our ending balance. All right, so you go ahead and try this now. If we had $100,000 in retained earnings, you made $75,000 in net income, and you gave out $15,000 in dividends, what would be the ending balance of your retained earnings at the end of the year? So I'll give you a second to calculate that before I show you the answer. Okay, so the answer you should have gotten was $160,000. So you got that by starting with the $100,000 at the beginning, plus $75,000 of net income minus your dividends would give you a net increase of $60,000. So 100 plus 60 equals $160,000. All right, so that's pretty much it. The terms were the statement of stockholders' equity, which is what we just made, and the other one was the par value of stock, which is basically the value assigned to stock when we initially sold it. All right, let's go ahead and jump over and do the work together on your own. Okay, so here we are in our work together problem for section 15-3. And as you can see, they're going to give you the income statement that they've already prepared for this company. That is the first financial statement you prepared, and we did that on Tuesday. And the reason you need this is because you're going to need to know what your net income after federal income taxes is to be able to complete the statement of stockholders' equity. Then they're also going to give you your worksheet. And interestingly enough, you could have also gotten that net income after federal income taxes from here. It should be the same number, 62,000 right there. So first thing we're going to do is we're going to title this with the name of the company. So we get that up here. It says our company is Interstate Tires, Inc. So we're going to type in Interstate Tires, Inc. This is our statement of stockholders' equity, and it is for the year ended December 31st. And I figured that out because it started on January 31st, so it has to end on December 31st. Okay, so our first section is our capital stock. Don't forget to title that. And we have to figure out our stock is a $1 par value, and we had 100,000 shares issued. So that means that our par value of our beginning here would be 100,000. And issued during the current year was 10,000 times $1 is another 10,000 for a grand total of $110,000. Okay, our next section is the retained earnings, and then our balance January 1. Well, where am I going to find that? I'm going to have to scroll over here. And I'm going to scroll down, and I'm going to see that my, oops, I scrolled too far. Retained earnings. So this balance on the worksheet is going to be the beginning balance. It actually also ends up being the ending balance here. So my retained earnings was $46,599.48. Now we have to figure out what was our net income after federal income tax. So you, like I said, you can get that one of two places. You can go up to the income statement and get it right there, or you can scroll down to the bottom of the worksheet if you only have that, and you can get that from the net income after income taxes line. So our net income after income taxes was $62,907.35. Minus our dividends that we've declared. So that's where we're going to go up to this dividends line and figure out what our dividends are for the year. And so those were $8,800. So my net increase, to get out my calculator here and actually do the math with you guys, is 62,907.35 minus 8,800, and we should get 50. I'm not in the right box. Come on, computer, you can do this. Okay, $54,107.35. So now I would have to figure out what is my balance of retained earnings. Well, I take my beginning balance, I add my ending balance, or my net increase, and that'll give me my ending balance. So to the $54,107.35, I will add the beginning balance of $46,599.48. Should get $100,706.83. And I hope this is right. We're going to check the answer in a minute. So then we have to get the total stockholders' equity. It is both the capital and the retained earnings, so I would add those two together. And this did not come out to be the right number. That should be 110,000. I didn't have enough zeros. Okay, so this should be 210,706.83. And then you would be done. So let's check and see if I did it right. If I did the math wrong, I apologize. I really don't like the... Well, look, we did it right. $210,706.83. All right, so that is the end of lesson 15-3. You can now do the on your own and the application for this one. All right, happy making stockholders' equity statements.